So, have you received any money via CashApp, via Venmo, via PayPal during 2022, and you're wondering whether or not if you have to pay taxes on that CashApp money, on that Venmo money, or on that PayPal money during this upcoming tax filing season? Well, guess what? The IRS certainly made some changes in their implementation approach as it relates to the threshold requirement that third-party settlement organizations must furnish as information returns because of the laws enacted inside of the American Rescue Plan of 2021. So you're wondering, now what does all of this mean? Well, come find out. Let's go.
The Debt Demolisher TV with Sophia Melone.
Hi everyone, it's Sophia Melone, the Debt Demolisher, here to bring you the tools, tips, and tricks to help you manage your financial baggage the right way. In today's episode, we're going to be talking about the juice and the gems all around these third-party settlement organizations, better known as the very mobile payment apps that you might be using on your phones each and every day. Many folks have been receiving or utilizing the CashApp, Venmo, PayPal to send money to their family and friends, and some of you have been using it to conduct business transactions, to receive funds in exchange for goods and services that you've delivered or rendered to potential customers. So as a part of the American Rescue Plan of 2021, this law that was signed into legislation had a little caveat in there indicating that they were going to lower the threshold for the reporting of information, meaning those companies that serve as a third-party settlement organization, they have a requirement to report the amount of income that you receive via a form called a 1099-K. So this 1099-K is a form that has specific criteria in place that will determine whether or not one gets furnished to you. So when it comes to 1099-Ks, these are essentially for business type transactions. So if you are someone who are in business and you are utilizing a third-party settlement transaction or third-party settlement organization to process your transactions for you, then you will be receiving a 1099-K only if you meet the criteria. Wait one second. Now, before I get into breaking down all the gems around this third-party payment settlement organizations and how this tax treatment is going to work, make sure that you hit the like button. Make sure that you subscribe. Come on. I know you want to do it. Get to it. And also leave a comment and let me know what you are most excited about finding out. That way I can know if you're really paying attention. Okay, let's jump back to it. So since 2008, the original requirement for third-party settlement organizations stood up, which required these companies to report your sales received, revenue received by month, if you were able to earn at least $20,000 in the aggregate within a year and you had over 200 transactions. If your sales met that criteria, then that company would furnish a 1099-K to you. Now with the changes under the American Rescue Plan of 2021, they have lowered that threshold from $20,000 plus 200 transactions down to $600 irregardless of the number of transactions. So because the American Rescue Plan Act initially says that this is supposed to take effect beginning in 2022, there has been a lot of hoopla and there has been a lot of frustration and there's been a lot of concern that has been expressed by taxpayers because they are unclear of how these companies are going to be able to segregate who gets a 1099 versus who does not. Because there are instances where people use these devices for personal reasons. And because there's so much that has been commingled, it may not be necessarily easy for the companies to be able to distinguish which incomes, what was received for business purposes versus what was received for personal purposes. Now, I'm going to tell you a little bit about what I think they're going to do. But before I do that, let's jump into the announcement that came directly from the Internal Revenue Service. So the IRS released this announcement at the ending of December 2022, letting everyone know that they have delayed the implementation for the $600 reporting threshold for third-party payment platforms that issue those 1099-Ks that I was talking to you guys about. So what they're saying is that as a result of the delay, these third-party settlement organizations will not be required to report tax year 2022 transactions on a Form 1099-K to the IRS or to payees for the lower $600 threshold that was enacted as a part of the American Rescue Plan. Subsequently, the IRS released some guidance on their website letting everyone know that the calendar year 2022 will be considered a transition period for the implementation of this lower threshold. So what this means is these third-party settlement organizations like CashApp, like PayPal, like Venmo, they will not have to generate a 1099-K for taxpayers who received $600 in the aggregate during 2022. However, if you did receive $20,000 or more and you had over 200 transactions, then you will receive a 1099-K from these third-party settlement organizations. So the IRS and the Department of Treasury has heard several concerns, and as a result of that, the acting IRS commissioner has released the following statement letting folks know why this tax year 2022 is being considered a transition period. So Doug O'Donnell says, to help smooth the transition and ensure clarity for taxpayers, tax professionals, and the industry, the IRS will delay implementation of the 1099-K changes. The additional time will help reduce confusion during the upcoming 2023 tax filing season and provide more time for taxpayers to prepare and understand the new reporting requirements. So as I've mentioned before, the American Rescue Plan of 2021 changed the law and changed the requirement to reduce it to the 600, but because there's so much confusion between what's considered a business transaction versus what's considered a personal transaction, they've decided to extend this requirement, not making it mandatory for tax year 2022 purposes, so that not only us taxpayers can be aware, but those tax professionals can be aware, and these third-party settlement organizations can be clear and are able to furnish the correct information to not only the IRS, but also to us as taxpayers. So what this means is we have a little bit of a grace period to be up to date on how we can get ourselves ready to ensure that we're going to be able to receive 1099-Ks for revenues that we really should be paying taxes on. So if you are someone who uses PayPal, Venmo, CashApp for personal purposes, you should not fret, you should not worry, you should not have anything to be concerned about because those will not be taxable to you. However, if you do use those same third-party settlement organizations for business purposes, then yes, please understand that you will be getting a 1099-K in the mail starting for tax year 2023 if you conduct those types of transactions. Now let's go back to what the announcement says as it relates to distinguishing business transactions versus personal transactions. So the IRS says that the new threshold for business transactions is $600 per year, which was changed from the previous threshold of more than 200 transactions per year, exceeding an aggregate amount of $20,000. So the law is not intended to track personal transactions, such as sharing the cost of a car ride, sharing the cost of a meal, sharing the cost for any type of household expense that you may have, any monies that you may send for birthday reasons, for holiday gifts, or for paying a family member for doing something that is for household related endeavors. But this law will begin effective January 1, 2023. So for any transactions that are business related, starting on January 1, 2023, up until going forward, those activities will be included. If it's for business purposes, it will be issued on a 1099-K if it exceeds $600 within a given year. Whoop! I know that I just dropped a heavy bomb on you guys, and I know that you guys are probably more than excited right now. So if you have not hit the like button, what are you waiting on? Hit that like button and hit that subscription button, and also hit that notification bell so that you can be notified of the next tax gems that's going to be coming up. You ready for some more? Let's go. So not only do we have the announcement from the IRS, we also have the administrative procedures that has been shared to let people know the laws, the legislations, and the revisions that's related to the timeline. One of the things that it says inside of the administrative procedures regarding the implementation is this. So according to Notice 2023-10, this notice announces that calendar year 2022 will be regarded as a transition period for purposes of Internal Revenue Service enforcement and administration with respect to the implementation of the amendments made to the de minimis exception for third-party settlement organizations under Section 6050WE of the Internal Revenue Code by the American Rescue Plan Act of 2021, better known as ARP, for returns for calendar years beginning after December 31st, 2021. The transition period described in this notice is intended to facilitate an orderly transition for the third-party service organization's compliance with Section 6050W and participating payee compliance with income tax reporting. So let's pause right here, because if you're wondering what is a participating payee is any person who accepts payments from a third-party settlement company for business transactions. So let's think about what some of these third-party payment settlement companies are. And these are companies essentially that more than likely they take a fee for processing a transaction for you. So these third-party payment processors can be anyone from Stripe, Square, PayPal, Wave, CashApp, Venmo, the popular ones. Anyone who processes a payment and makes a deposit into your bank account for those activities, then those are considered payment processors. This explanation is also included inside of the notice. So as you can continue to see, they're given thorough explanations behind the requirements for the reporting of third-party settlement organization activity, and they're also giving you and the thresholds that will be in effect for tax year 2022. So all of this information is inside of this notice, and it lets everyone know what the stipulations will be. And they're giving us full warning that we have to make sure that we are knowledgeable and that we are aware, because there will be no excuses to say, I don't know, because of the changes that they're making, because of the implementation phase that they're incorporating. They are literally saying that there will be no leeway, there will be no leniency come the timing for reporting and filing for tax year 2023. So what are some tips and what are some things that you can do to better prepare and position yourself for this tax year going forward? Because we're in the beginning of 2023, you want to make sure that you're positioning yourself as much as possible to be in compliance, to be ready, to start tracking, so that way you can be able to distinguish what you received in terms of income through these third-party service organizations that are actually personal versus business. Because if you have your records and it doesn't tie up to what you may be getting from the third-party organization, how can you rectify it? How can you dispute it? How can you challenge it? So my challenge to you, starting now, because we're early on in this year, track every single source of payment that you get through these apps. And if it's personal, make sure that you tag it as personal. I don't know if you guys have noticed this, but if you have CashApp, one of the things that they do now is they provide a monthly statement to you. So if you ever notice that you get a statement or you get an alert or a notification that a statement for the month is ready, they're essentially summarizing how much you received in terms of income through that platform. Now, what you can do is use that information as a reconciliation tool to flag and identify, well, which of this was personal and which of this was not. Another way to distinguish between these transactions is by making sure that your profile is set up as a personal profile versus a business profile. But if you do know that you accept CashApp for business purposes, then you want to make sure that you have an account or you have a phone or you have a profile that's solely set up for business purposes. And if you have your phone set up for business purposes, tell people not to be sending you cash apps through your business profile, because it's going to show up as a business transaction because it's under that business profile. So if you want to check your settings, that's one thing that I suggest and recommend that you do. But even still, we don't know 100% if they're going to be basing it off of the profile or if they're going to be basing it off the actual activity that comes through. This is why I'm telling you to make sure that you begin to track from the beginning, because we don't know what's going to unfold as these service organizations begin to narrow down on this requirement, because the due diligence is going to be on not only you as the taxpayer, as the recipient, as the user of the tool, but it's also going to be your responsibility to follow up with the actual issuer of those information returns that's going to the IRS. Because the IRS is going to use those forms that they get from this company as an expectation of what they expect you to now file on your income tax returns. Because if the two do not mesh, if the company reports one thing and you report another thing, trust and believe you are going to get a notice of discrepancy in the mail from the IRS, where they are going to adjust your amount due, and more than likely it's going to result in a tax deficiency. And that means you would have to pay what your deficiency is as a result of underreporting. So you want to make sure that you're doing your due diligence, and now in the season, don't just take these files, or don't just take the company's files at face value. You track on your end too. This is the season of verification. This is the season of trust but verify. This is the season that when changes go into effect, you have to have your eyeballs on it, because you don't know where the mix-up may happen. And if you aren't tracking, if you aren't doing it on your part, then you're going to overlook something, and you're going to be paying taxes on something that you should not. So this is the time for you to learn. This is the time for you to implement. This is the time for you to begin to put your process in place right now, so that you can begin to do this assessment, do this tracking, do this tagging throughout the year, and not wait until it's 12 months down the line. Is that clear? Speaking of trust but verify, I know that you all come to this channel so that you can get valid information that you can be able to apply to your own financial life. But I'm letting you know that I want you to verify for yourself. So down in the description box, as well as in the pinned comments, you're going to find the DDTV toolbox that's going to contain some links that's going to take you right to the source of the IRS's webpage that talks about this very thing that we've discussed, as well as I'm going to give you the link to the notice 2023-10 for you to be able to read for yourself and share it with those who need to know as well. But make sure that you send this video with them, so that way they could be able to watch it, hear it, and then also review the information at their own leisure, so that they can trust but verify. The last thing that I want to share with you all is to make sure that you're being honest with yourself. Make sure that you're being honest with your transactions. One thing that is important to do is to remain in integrity. I understand that there are instances whereby you feel like, well, I shouldn't have to pay taxes on this, or the rich people get to do this and the rich people get to do that. If you are in business, then you can offset that income by legitimate expenses. So don't feel like you have to finagle your way out of something. Be honest, be in integrity, and report what you receive. But your job in the season, when it comes to this 1099K information, when it comes to these third-party settlement organizations, you have to track. You have to have your bookkeeping in line. You have to have your support in line, because no one is going to do it for you unless you pay them. That was good, wasn't it? Yeah, that was good. I know it was. I know you're feeling really relieved right now. And with all of the tips that you just got, I'm hoping that you're going to share this out with somebody else so that they can have a stress reliever too. But nonetheless, if you didn't like on the way in, make sure that you like on the way out. And remember, your financial prosperity awaits you, and so does your financial sanity. You already know what I'm going to tell you to do, and that's what? Get to work. All right. Bye. Let's get ready to rumble.
The Debt Demolisher TV with Sophia Melone. The Debt Demolisher